Bobby, what's up? I had to restart the feed because I don't think my notification is getting out there. I had a few people in here, so I'll wait for them. Chud, what's going on? Just gonna wait for people to get in here. Circle Boy. My first time I tried this, the signal didn't get out there that I was on, so I restarted it. The first part of the class is already up, but I only was talking for about 5 minutes, and I realized that my notification may have not gotten out as well as it could have. So we'll just give it 30 more seconds here. Everybody's joining again, so just give it a minute longer, then we'll get going. You got it? Okay, cool. Yeah, I don't know what's up with it. No idea how to fix it either, so that's that, I guess. Path, what's up? Alright, guys. I'm gonna get back started. What did you say crap about? Did it not send the signal again? Or the notification or whatever? No, I haven't been on for a while. I just got back on. Alright, man. Alright, let's get back to it. So, as I was explaining, the market maker has determined kind of what he has to do. Obviously, he has to induce that position, create the panic on his traders, and obviously hit the stops and clears board. I discussed the trap times and stuff like that, but now we're going to get into kind of just general phases and the daily setup that the market maker uses. And this is critical to knowing where you're at in the market, because generally you'll notice what he's in and you'll be able to understand what he's trying to do. So the first thing is the accumulation phase, and obviously in the accumulation phase, the market maker sets, this is usually an Asian session, he sets the initial high and the low of the day. So when he does this, he will generally spike in one direction, then consolidate off that. And they call it accumulation because obviously he's getting orders, but he's trying to figure out, where he has more orders, because let's say he has 40 million trapped in long holders and 3 billion in short holders. Who do you think's getting, the blame? The short holders are going to get hit because all that money is, or the long holders are going to get hit because all that money's in the short holders. Forex is the foreign exchange market. It's trading currency. It's kind of like the stock market, but it's open 24 hours a day, 5 days a week. It's the biggest market in the world. I'm not selling it in any way. I'm just kind of helping people out. But anyway, so the first thing in the daily setup is the accumulation phase, like I just explained. The second thing is the stop hunt, and this is why I played that Asian session out of the box in London. And the stop hunt is the general, the false move to the market maker's real intentions. So imagine a spike to the high of the day. I'll draw it out for you guys real quick. A spike to the high of the day, and then consolidate off of it, and then a huge spike up, extending the high of the day, maybe 2 or 3 levels. And when he does this, he's going to generally collect those contracts for those buyers or sellers, and then go the other way. So I'm quickly going to draw this out for you guys. This is why I brought my iPad here, and you'll be able to get a general idea of a stop hunt. Well, you guys will all be able to see it. So this is the general phase of the first into Asian session here. So here we come, accumulation phase. He sets the initial high of the day here, as you can see, and then what he'll do is accumulate, and then he's going to do a stop hunt rise. So he hits 1 hit to the high, 2 hits to the high, 3 hits to the high. And then if he has what he needs, yeah, absolutely, I'll keep explaining. If I'm trying to get it so you guys can see this too. I'm sorry. Let's see if we can move this around. So you see that. 3 hits to the high of the day. And then what he does is he immediately gets the hell out of there, as I explained earlier. Yeah, you're right. I might have to turn off the light. I don't want to go away from you guys, okay? Don't leave me. I'll be right back. Let's see. That's a little better. So what he'll do is he'll hit 3 hits to the high of the day. And as you can see, he went 1, 2, 3. If he has what he wants, he's going to immediately come off this high here. But if he doesn't have what he wants, he might hit another hit up there and then drop. And that's that classic M formation here that we always try to enter on. And when you see this M formation, he might even extend this original high with a pin. And when you see that, that's when we try to enter on the shift, where he shifts the zone and goes down. All right, that's not going to work. So what I'm going to do is actually, I'm going to draw it in a different color and turn the light back on so you guys can see me, and then we'll go from there. I'll be right back again. All right, so let me clear this page out and I'll give you another example of what the market maker likes to do. All right, I'm going to change the color of the pen, maybe make it a little thicker, and we'll see if that's better. All right, I'm just going to do a test drawing here. Kind of, sort of. Can you guys see that better? Cool. All right, so I'm going to give you one more example of accumulation, and then we'll go on to a new one. All right, so here's another classic example. We have accumulation, okay? The accumulation phase. What we'll do is we'll come out of the box, we'll consolidate, and then we'll hit, 2 or 3 hits. I tried replicating 3 hits to the low. What he'll do is he'll do this to create short holders down here. So here's short holders here. People are selling the market. When they sell this market, they're gaining their contracts. When they get their quota, they will either come straight up from here, or they will retest it one more time. And that is where we like to get on that second retest. And that's coming out of the Asian session, guys. Out of the Asian range. So that's 1 a.m. Eastern time. We look for this exact setup. And then I want to explain the real trend move. So I'm going to redraw this here. So here we have accumulation phase, maybe 3 hits to the high, double top, and then the real trend move. The real trend move lasts 6 to 8 hours. That's the real trend. And when we say trade with the trend, when you're in the real trend move, in this case going down, never go against it. So never buy in a downtrend. When you're on the real trend move, never do that. Ever. Because it's a stronger trend, and even if it does come up a little bit, and I'll explain that in a little while, pullbacks, even if it does, the max you're going to get out of it, the max is 25 pips. And is that really worth losing? Because the real trend move is so strong. And then the last thing that I want to explain, let me erase here again, is the ending of the day. So what we'll do is draw a full day. We start with this Asian zone, 3 hits to the high, down here, and then what we'll do is we'll come all the way down, and then we'll come back up and end the day in consolidation. And what they like to do is almost end the day where they started the day. Can you see that, how it almost met? And look on the chart sometime. The real trend move starts usually around the UK session or New York session, depending on what the market maker wants to do. So every day, if you look at the start and ending of the day, they will almost meet up. And that's because they really don't fluctuate price. They just do it throughout the day, and then when they meet up at the end, price hasn't really changed. And you can see how the market maker makes their money by just screwing with you all day long. Once you know that, you can trade with the market maker and you're golden. Alright guys, we're going to stop for the first questions. Let's hit me with some questions and let's share that feed. Let's get 20 people in here for this next part. Share that feed up, guys. I'm gonna grab a water bottle real quick. Absolutely. I'll explain the market maker in just a second. All right, I'm going to start explaining now. So, in the Forex market, if you're familiar with it, let's find a picture. If you're familiar with the Forex market, you know, yeah, I'm going to try to find some examples. And just give me time to do it because I don't have any, I don't think I have any screenshots on my iPad, but I'll look them up for you. But the Forex market is basically interesting because it's a market that can go up or down, and meaning you can sell at high or low. And when you do that, you can make money either way, whereas stocks are only one way. So you have to have some sort of moderator or market maker to, of course, keep currency level, but also keep, you know, people from taking all the money. Let's see. So the market maker wants to do three basic things, right? And the three basic things are: one, he wants to create panic in you to make you feel like you're going the wrong way. Two, he wants to make you induce a position, whether that's buying or selling. And in the market, if you sell the market, anything that drops makes you money in Forex. Not just sell as in get out, but sell is actually gaining a position for you. And then also what he wants you to do is he wants to hit the stops and clear the board out so that when he does this, he will have a clean slate to work with. So that's generally what the market maker is. Yeah, exactly. I found an interesting picture on my iPad. Here's a week like I was talking about. Here's the week like I was talking about. It's hard to read, but every week we begin to try to trap those traders. Like I said, beginning of the week, trap move. We have a false move, week beginning. I highlighted it here. You can see that the pair went down. We call it an anchor. Usually happens Tuesday, Monday or Tuesday, and it anchors at a point, and that means it won't go back there. And it anchors, and then it comes up. And what they do is eventually they're gonna either keep going up the rest of the week or what we call a midweek reversal. And this is very imminent once you really know the knowledge of it. And what they'll do is actually change their direction back down here. So as you can see, we had a false trend to induce, in this case, shorts, some sellers, and then they went against that with the real trend for the rest of the week. Here's another one. We began the week with this false trend. What we did was we anchored once, then we came up, we did a midweek reversal, kind of another anchor, and then came up, and we continued this upward trend. And here's the one on the opposite side, right? So we have a false move up, and as you can see, the trend then went down for the rest of the week. So every week good job, Fabi. Every week this generally, there is examples where it just completely doesn't do that, but generally every week you'll see a false move into Monday. That's why I prefer to not trade Sunday night, and I wait for Monday to clear out, because then they get out of all the trap. And can you see the anchor points? Pretty much, here's how I see an anchor point. Monday night, let's say we're trading. When we see that spike, to a high and then it plays off of that, if it keeps going down in New York session and it hasn't come back to that level, it's clear to say that it's the anchor point. Especially, it's best to trade midweek, exactly. Especially on the anchor point, because if let's say we come out, and I'll draw another example for you guys. Thanks for the engagement. And then we'll keep going with learning more new stuff. So this is in a weekly time frame, okay? Weekly time frame. like I said, we do a false move. Circle, ask some of these guys in here. I'm sure they probably know some information. Path, you probably know like a good instructor maybe. Path, who's your instructor? Is he pretty good? He's somewhere in there. Path to Success will explain it to you. He has a pretty good instructor, I think. Okay, anyway, we get an anchor on false move midweek, false move beginning of the week, maybe Monday. This will be our anchor. And what we'll see, if it plays off of that real quick, and then it comes a New York session, it might come back up. But if you see that next drop, we understand that this is the anchor. So then when we get an Asian range, we know that they're going to continue this anchor move, and they'll come out of, they'll consolidate in this Asian range here. They might do a vector 3 high, not touch anything there. Maybe that support line will hold, that resistance, I guess, will hold, and then come back down into what would be Tuesday, and work again down, and then into Wednesday create this midweek reversal idea, right? Where we reverse and come back up to make sure that we don't lose too much money in the week. Let's do another. Example. So like I was saying, with right, everybody make sure if you don't have notebooks out, get this out to understand what I'm saying. Asian session and stuff, you know the times. Every time I'll say, every time I say something, as far as times, it'll be Eastern time. Okay, so this is how the day runs, right? We start every day in America at 9:30 a.m. Eastern time. 9:30 a.m. Eastern time. So write down New York session, 9:30 a.m. Eastern to 5 p.m. Eastern. Okay. There's New York session time. Okay. Then from 5 p.m. Eastern to 8 p.m. Eastern, we call that dead gap. Okay. Some people refer to it as Tokyo Channel. Different names for it. Dead gap, if you consistently look at it day after day, is a consolidation period. I don't ever look at it. Literally for those 3 hours, I don't bother, because there's never enough of a movement to even bother of trying to gain money. And at 5 p.m. Eastern time, when New York session ends, is when the FOREX markets start a new day in their world. So that's when anything before that day, as far as highs and lows of the day, have completely been shut out. So at 5 p.m. Eastern, we have a new high of the day, and that's when we go in Asian session. And from 5 to 8 is dead gap, and then at 8 p.m. Eastern, we go into Asian. From 8 to 3 a.m., 8 p.m. to 3 a.m., we're in Asian session. So the first part of Asian session, from 8 p.m. Eastern to 1 p.m. Eastern, is the part that they really start to either accumulate for the high of the day or low of the day, and they'll initially do this, okay? When we get to 1 a.m. in the morning is when you really start paying attention to the charts. And you can draw this on your chart. Draw a horizontal line at 1 a.m. in the morning, and then after that, pay attention to what happens. When they blow out the high or low of the day, watch for quick movements above that. And when they do that, they're inducing traders to go that way. And then suddenly, they're going to rip off of it, either rip completely down or retest and then come down. So watch for that, because that's the moves that I take every time. And these moves are usually 50 pip moves, 50 to 60 pip moves, and they're real good because they'll come all the way down to New York session, or they'll continue through New York session. So, as I was saying, we have from 8 p.m. Eastern time to 3 a.m. Eastern time. And this, yeah, I hope this makes sense too. From 8 p.m. Eastern time to 3 a.m. Eastern time, we have Asian session. Then we have a gap. We have a gap from Asian to London. This gap here is when this Asian guy explains to the London guy what he wants to do for the day. So he's like, okay, we have this many people here, this many people here. We're gonna go this direction to trap these people. So when they explain that, that's why London session is one of the most important times of the day for you as a trader. That's why traders are always tired, because at 3:30 in the morning Eastern time is when the big move is made. Okay, watch the candle at 3:30 in the morning. This is when London comes on, and he's going to try to trap you at the beginning of his session. That's the trap time. Trap time is beginning of session and end of session. So we have this Asian end, London beginning. This is all trap. This is all trap. And that's why what we try to watch for is right out of the Asian box, right at the end of Asian, they'll do that 3 hits in one direction. And then beginning of London, they'll continue that 3 hits to the retest. They're trapping you long, and then suddenly, bang, they come short. And you have to think outside of the box. You're not going to follow that trend. You're not going to fall for their crap. You're going to catch it coming the different way, right? So if you think about it in that context, you can understand what they're trying to do. Now, given this doesn't happen every single night, guys. This doesn't happen every single night. So if you don't see this kind of a move, and you'll know this is called a vector 3. And let me look it up. Let me look it up for you guys. When this move hits, you'll know, because have you ever seen 3 consecutive candles that are like 15 pips each or 10 pips each? Because when you see those things, 1, 2, 3, you're like, oh crap, guys, you're texting all your buddies, you're giving out signals, it's going up, and then everybody gets in, and then suddenly it consolidates, comes back down, and you're like getting nervous, and then all of a sudden they see it's going up again, and they retest, they're like, yes, we got it, and then it slashes down, and then the whole group is like sad. That's what the market maker wanted to happen to you. So I'm going to look up a picture real quick and see if I can find a vector 3 for you guys. Everybody share. Yeah, man, share it on Facebook. You know what, I have an idea. I'm going to draw it. So I'm going to draw this here. And what I'm going to show you is, so pretend this is Asian session, and we'll bounce in this Asian session range. Okay? So there's Asian. They've made this initial low of the day and the high of the day. Whatever way they decide to go. In this case, we're going to go high. What they'll do is do 1. There's 1 green candle. 2. And 3. And they'll do 3 candles towards the high of the day. And as they've done this, they've gained buyers in here, buyers in here, buyers in here. Then they'll come off, they'll make another pin, maybe pin higher, and then that's when they come off the high of the day, and they create that classic M pattern that all of you that are enrolled know so well. Okay, so that's what I mean by when I say a vector 3 rise. It's 3 hits to the high or the low of the day, and they don't have to do this every day. So if you don't see it, you don't trade it, right? But what they've learned to do now is people know this. They know what me and you know. Not many do. A lot of people just go off pure trend lines, right? And they draw these trend lines, and they grab the Fibonacci thing, and they bring it down and go, oh, that's where it's going to go. Here's your support and resistance. Sell off 1.343. The market makers are aware of that, and they're going to try to maybe break that, fake you out, get you to buy, then come down. That's why you don't watch that crap as much. It works majority of the time. I'll give it to you. But sometimes a market maker is going to, be like, okay, everybody knows where we're going. Let's trap them. Let's get them to buy, and then, go above that support line and then rip it down. So if you understand this stuff, you'll be fine. All right. So everybody needs to know of one trade. If there's one trade in the world for you to know, this is what it's going to be. I'm going to explain it. And it's the only trade in the world that if it is seen, and this is all going to be using a terminology that actually I don't think anybody in this room will understand. because I know some of you guys are enrolled, but I don't even think you guys will understand because you guys are so early on in the experience. Okay, and this trade is called the Brinks trade. Why do they call it the Brinks trade? Because you can load up the Brinks truck, right? You can guarantee you're getting paid that day, whether that's 50 or 100 pips. Okay, and this is how this trade works out. When you see a trade at the beginning of London session, so the first candle in London session, 3:30 a.m. to 3:45 a.m. on the 15-minute time frame, that first candle, which is at 3:30 to 3:45 time frame, this candle here, when it is a hammer, pips stand for point and percentage. It's so in the stock market we refer to movement in the market as points. In Forex we refer to pips. Does that make sense? Does that make sense? Pips? P-I-P-S? Alright, well, you didn't answer, but I hope that made sense. A little, cool. And I'll actually, hopefully I'll explain maybe how to measure a pip soon. I'll get on my computer one of these nights and do that for you. Okay, let's shoot for tomorrow night or something. Anyway, so this is the most important trade. Listen, okay? This is the most important trade you'll ever take in your life. I've caught one, and it's the most amazing feeling in the world because you know you're getting paid. You can go right to bed, don't have to hit a stop loss, and you just wake up and profit. Okay? This is what it is. When you're on level 3, okay, you make sure you're on level 3. If you're not on level 3, you don't take this trade. Level 3, you're on, and the second point of the M or the W, and the 3:30 to 3:45 candle ends in a hammer. If it ends in a hammer, you know you're getting paid. The market maker is not coming back to that point. They are going in the opposite direction. The Brinks trade, the most important trade. I can guarantee you a path that this thing is on your chapter 1 exam. That is a question on the exam. There's your hint. For those of you that don't know what a hammer is, I'm going to draw a hammer. Have you ever seen a candle that looks like this? That looks like that? That is called a hammer. They never go below this part here. There's no wick. Okay? There's only a wick on one side, and they call that a hammer. This can be either way. So it can be like that, or it can be like that. Either way. But this is a hammer. Now this just depends on which side you're going. So for this, that'll be a W, that'll be an M. You got that? That's the Brinks trade. Level 3, second leg, M or W, 3:30 to 3:45 candle ending on a hammer. You see that? You put in a little extra. Okay? You set your stop loss literally 2 or 3 or 4 pips. Only that much above, because they're not coming back to that zone. And if they do, it's either A, it wasn't a Brinks because you weren't on the right level, you were on a level 1 or level 2, or B, they opened that spread way up like 8 or 9 pips and they caught you. Because when they open the spread, they can catch anybody that's in that zone, right? That's what one of their tricks. If they come up towards the high of the day and they open the spread, you know they're trying to catch a bunch of pendings the wrong way, and then they're going to go the other way. That's one of the tricks they use, is opening the spread. So that's the Brinks reversal trade. And this can also happen at the 9:30 to 9:45 a.m. handle in the morning New York session. So be wary of that too. I have one more example in here of that's a hammer right here. That's a hammer. Keep that in mind. Okay, so the market maker also, what he likes to do is mask himself. He wants to put that fake face on and make you think that things such as news are really news, when he's using the news in his best interest to try to trap you guys. So the first thing is he's always changing the sessions that moves come. So one week he might be constantly coming out of that Asian range, hitting a vector 3 rise and plummeting. And the next week, suddenly he's doing that in New York session, or he's doing big moves just during Asian session to try to catch people off guard. So when he changes the theme, he will do that by changing the times. He will also change the severity of stop hunts. So when you think of a stop hunt, I'm a little bit guilty of this too. When I think of a stop hunt, I think of a huge wick, right? I don't know if when you guys think of a stop hunt, you think of a huge wick. You know, they're always like, watch for the huge wick, right? So when I think of a stop hunt, I think of maybe a little candle with a massive wick, right? But now the market maker has caught on to your psychology, and he's like, oh, they know when we're doing this. They know what we're doing. That's called a stop hunt. So what they've changed is now they'll do something like this. Or actually, I'll just erase and I'll make a new one. Now they'll do something like this. They'll have a huge candle, and they may do a tiny little wick on there. Because when you see that, you think, oh crap, it's still going up. But that's in reality, that's the highest they're going to go right there. That's the stop hunt. And you know, I'm still trying to, there's nobody that's pro at catching these stop hunts. You know, people are really good at it, but sometimes when he changes that theme, it's impossible to catch perfectly. But if you know where he's going, you get in the general direction within 5-10 pips, you're golden. You can catch 50 pips a day, put in $1 a day in the market with 1 to 200 leverage, make $500 a day. Who doesn't want to make $500 a day? You know, work 4 or 5 days a week, $2,000 a week, $2,500 a week. You know, whatever you want. I mean, double that. Triple that, put $10 in if you have the account size to do it. Heck, the guy that I learned from, $50 lots, $25,000 trades in 1 week. It's amazing. That's why Forex is so amazing. If you understand what price is doing, what the market maker is doing, enjoy the rest of your life, you know? You bring up a good point, Pat. You bring up a really good point. When I was talking about vector 3 pushes to the high or low of the day, you know, 3 big wick pushes, 3 big candle pushes there, I was talking about something like this, you know, 1 candle, 2 candle. Imagine these bigger, right? 3 candle. But Pat just said, he brought up a good point. Sometimes, out of the high of the day, you'll see this, right? You'll see a massive candle. And if you zoom in to the 5, and I'll use these 2 drawings the same. So this can be on the 15-minute. Pretend you don't see this, right? That's a 15-minute. That's a vector 3 rise, right? 3 hits to the high of the day. Now imagine this here. You can also see that. But imagine now that you saw this on the 15-minute right here, 15-minute chart, and you zoomed into the 5-minute chart. You'd likely see something like this. It came in 3 pushes. They hit it in 1 candle. They, you know, deceived you to try to make you think something else was happening, either momentum or whatever, you know. So that's another good point, Beth. Another good point is that on the 15-minute chart, if you see one big candle, be sure to look into the 5-minute chart. And if you see 3 clean pushes, 1, 2, 3, watch for a retest. Watch for it to draw down. Watch for a retest at that same level. And if you can draw your sign, you know, your line up there of that first hit, and you see one either get hit or a wick come by, comes down the other way. You know what's happening. I know you've been studying, brother. So the third thing that they'll do, the third thing that the market maker wants to do is, with his variation on theme, is he wants to hide what he's doing behind news. This was a perfect example in last month's NFP, non-farm profit, for those of you that don't know. And what the market maker did was the traders that I was trading with that day, we understood what level we were in. We were in level 2, okay? We understood that we were in level 2 on Euro USD, right? And we were going down. And since we understood that we were on level 2, you know, we knew that either the market maker was A, going to continue his natural pattern and shoot it down for the 3rd level, and that was it, and we were on the reverse. Or B, fake out the traders and go up and completely ignore the pattern. And he did that. He shot up, ignored the pattern with NFP, right? He hit it. Because he either A, knew what NFP was going to do, and he made the pattern reverse off that beforehand, or he had a say, right, in NFP, which is likely not the case. Okay, so he went reverse. So what was he had to do? He had to continue the pattern. So literally everybody in the chat room that day, we waited for the candle to close. We saw the wick was a little bit short, and we waited. The next candle hit another wick, and we all got in a third candle. The wick was about the same, nice and high, and we sold actually. We went on a short position, and the rest of the day that thing dropped. I can't remember, we cut like 75 pips the rest of the day because he had to continue his pattern. And then he went into the night, he did a stop hunt in Asian in Monday, and then continued his pattern. So you have to think like what he's doing. So this NFP, we're going to be watching for that. Anybody that's in this thing, in the chat, with me, we're going to be watching for that, and we're going to try to either, if he continues his trend, we're not going to be in. But if he goes against it, we're going to watch. And if we see that he's going to start retracing, we're going to be making money that day. It'll be gradually slow. It's not going to be a slam down, but for the rest of the day, we will constantly be checking our phones every 35 minutes to an hour, and we'll see consistently better profit all day long, right? So that's how he uses. Yeah, it's awesome, man. Let me see if I can find an example for you. I'll find that exact trade, actually. Hey, give me some hearts. Who's enjoying this? Who's learning something? Heart this thing if you're learning something. All right, we're learning something. At least a little bit, right? All right, guys, let's see. We're going all the way back to October 2nd, I believe. All right, here we are, guys. Here's exactly what I was talking about. Here's NFP. You see that big green candle going up? That's 15 minutes, over 100 pips in 15 minutes. And we understood what level he was on. And we understood that if he went down, he was continuating his pattern. Or if he went up, he was manipulating the pattern. He decided to go up. We watched for it. We all got in about here. And we were in consistent profit, as you can see, all day long. You could take out at 25, 50, 75. You could take out at whatever pips you want. And if we scroll over, he spiked it, just like I explained to you a minute ago. I didn't know exactly what he did, but just like I explained, he spiked again, tried to fake out, and then he continued to drop, as you can see. And then once he did that, he finally got in level 3, and we reversed out of it. So there's the breakdown of that trade, right? And that trade is so important to know because people oftentimes will guess or get an insider thing on NFP, and if you're the wrong way, and the market maker sometimes, your broker sometimes accidentally doesn't hit your stop loss or something. It's happened to me before. You can be down a lot of money, right? If you guys didn't know that, they can open up the spread on your stop losses where they know most are, and they don't have to hit them all. It sounds illegal, but it's the truth. And if it hasn't happened to you, it will. And you're lucky if it hasn't, right? It happened to me one day on a euro trade. And the euro trade was, I was in profit, went to bed, had my stop loss here. Just so happened that my stop loss was hit on 4 of my entries. I think all of them were smaller, 5-cent entries. And then on my big one, my 25 center, the opportunity to make hundreds, the stop loss wasn't hit. Accidentally does what? Wi-Fi tripped. All right. If you have to write down anything, write down this. So understand that the market maker isn't invincible. He can't just rise the market 1,000 pips in a day. He has limitations. And with these limitations, it gives you the power to know where the market's going. So the first thing you have to know is a market maker on average can only move the market 200 pips in a day. Okay? So if you know this, if the market maker drops suddenly, huge drop, right? And he drops that thing, let's say 120 pips, like massive drop, news time maybe. He drops at 120 pips. He continues that trend going down, and he's reached 240, 250. It can happen, 250 pips. He reaches that in the day, and we have 4 hours left in the day. Understand that he has to come back in that 200 pip range. If you understand that, you can anticipate that he's about to reverse, and you can gain a position and make money. Understand that, right? And at the flip side of things, count his week. If you look at a weekly candle and you're towards the end of the week and you highlight that thing and you drag and you see, oh crap, he's at 740 pips. Understand that he has to make a big correction because he only has 600 pips in a week. It's his rule, It's just how it is. And, I didn't make the rules, but it was how I was taught, and I've back studied it and I've looked at it. And if you look at it, they're either way below that or they're right around the 600 pip range. They don't go over because they have limitations. They don't have unlimited equity. Did you know it costs them $1 million to move a pip? One pip costs them around $1 million. They're trying to save money, as you can see, and they want to be able to make their money. And that's how they're doing it, is by screwing you over. So the three most important things to understand about the market maker really is understand his pattern, his limitations, understand the timings of when it's happening, the sessions. But with high leverage, 1 mil is not much. Well, think about this though. It's not with leverage, it's his money, 1 million. 1 pip. When he makes a 50 pip move, 100 pip move, it's costing him a lot of money. You're right. Forex is highly leveraged. I love it. So understand that the patterns, the timing, and the levels are the three most important things. Three most important things that you can look at, right? So if you understand the level that you're on, right? You're at level 2, and you'll understand all this eventually. If you're at level 2, right? And you understand his pattern and where he's at. If we're on level 2 on a Wednesday, and we see that it has to do with the ADR, average daily range. So like, I know you guys some of you guys maybe are new, and that's my apologies. I'll introduce myself a little bit. But on my charts that I have on my computer, what it has is ADR equals, and it'll tell you how many pips they've moved, and it'll say yes or no if they've reached their cap. And then it'll give you a highlight box. And I have a perfect example upstairs that happened on Euro. They went above their ADR by about 25 pips, and by the end of the day, they were right in the middle. They were right in the middle by the end of the day. And it was a beautiful thing because it shows exactly what I'm talking about. But if you guys understand that, they're limited, you understand the levels, the patterns, they're going to do a false move every week, and understand that they'll anchor and they'll do midweek reversals, understand their patterns, understand their levels, and understand what time they do their major moves, you can beat the market maker. And if you beat the market maker, you can be on the beach every day, make one trade a week, one trade a month if you want, and you're set for life. I'm not there yet. Most people aren't there yet. The guy that I learned from, he makes, like I said earlier, one trade a week, and he waits for midweek reversal. And if he doesn't see it, he doesn't take it. $50 lot on a leveraged account. Makes 25 grand. I've seen him do it. He's in a live session with us. I've never seen any trader in the world like that. I've seen traders make $1,000 in a night, $5,000 in a night. But he's insane. 8-figure income. All right, so now that I've been talking about levels and everything, I want you to understand kind of what levels are. So the market maker does basically two different things. And write this down. He does an MAAW pattern, meaning a double top high, retrace, double top bottom. He can continue that trend. Or a WVVM, meaning a double top bottom, pull back, double top high, continue, or reverse. Those are the only thing he does. And those are consisted of levels. So everything you see there, that W, V, V, M, those are the 3 levels of rise or fall, okay? And we'll be on this reset, a reset at the M or the W. And the way you'll know this is when all the EMAs get slammed together and they're all bunched up. The water, the mayo, the ketchup, the mustard, the blueberry. They're all within the same, 25 pip range. They're all together. That's indicating a reset. And when you see that reset, understand that a move is coming. And then if you understand that the move is coming, that you're on a level 1 reset, if it goes up, you'll be on level 2, it's going to go up again. So then you have that upper hand on the market maker. So on level 1, the market maker wants to make you not know which way he's going. Me, you, anyone, God. Nobody knows what way he's going exactly. So the market maker on level 1 is going to be really fast moves. That's when you see those like 25 pip bursts this way, 25 this way, 30 this way, 15 this way. And they're going like this. Okay? Then when they finally do it, they'll go to level 2. And that is, level 2 is driven by just, the buyers. And he's letting level 2 kind of make itself out. And that's driven by the absence of the market maker. Level 2 doesn't have much to do with the market maker. He's not going to manipulate you much. But level 3 is when the market maker really has to step in and go, okay, I'm going to bring in my lucky underwear and I'm going to step on it and I'm going to kill you guys today. And this is when he triggers those huge stop hunts. And he tries to really get you screwed because that's when he is going to reverse the market most likely. Level 3 is when he is most likely to reverse the market more than any other level because he's not going to reverse it on level 2. Let me tell you that. Because people have a psychological thing with 3 levels of rise. Because what they see is, think about this. You watch a pattern on a 1 hour. You watch it rise once, okay? And you see it do it again. There we are on level 3. You're like, oh man, it's risen. And then it stopped. And it's risen again. It's stopping. It's going to rise again. Because we have this mental thing with 3, And then we get in, and then he reverses it on us. It's a psychological thing, and you have to know that it's there. Thanks for all the hearts, by the way. It's beautiful. It's a nice sight to look at. So yeah, on level 3, they're trying to trigger the panic and hit the stops, right? And when they do that, they're making you panic. What way is he going to go in? They're going to go up there. They're going to slam. Hit your pendings, hit the stops, slam it this way, and that's when we make the money. When we make the money. When the most people are losing is when we make it, because we're doing opposite of what they think is happening, right? All right, guys. So, what questions do we have, right? That's what I have for today. That was my first spiel on the market maker, kind of what he does. That was a real quick rundown. No examples, nothing concrete, just a rundown of who the market maker is for those of you that didn't understand that it even existed, because some people don't know that. So what do we got for questions, guys? Comments, concerns? Is what every day? Me doing this? Hey, good. I'm glad. Yeah, they're always doing one of them, man. They're always doing one of it. They're either getting the contracts or they're making those big moves. Let me put up something. Whoever was saying that I just sparked an interest, don't leave just yet, okay? I'm going to try to pop up an email, okay? And you can email me, and we can talk more, and I can try to clear out more stuff. Okay, cool. I'm just trying to find $100, Judd. $100. You know why? Because the beauty of Forex is that you can leverage your account. So think of this, right? And I know you guys don't understand much, but if the market maker moves the market 50 pips, you put in 1 penny, you can turn that penny to $5. 2 pennies, $10. Okay? 5 pennies, $25. 10 pennies, 10 cents, a dime, $50. $1, $500. You get the point. 10 standard lots, $10, $5,000. Okay? That's why you can put in $100 and you can make money. Because if you make quality trades, yeah, screenshot that. I'm trying to find I'll just write it. So yeah, you don't have to put much money in. For those of you that I just sparked an interest with, as far as Forex, can you guys see that email? PADDYPK123@gmail.com. PADDYPK123@gmail.com. Got it? Okay, cool. Well, guys, I'm super glad that I taught somebody something, sparked an interest in Forex. Wherever you go with it, that doesn't matter. If you trade, there's so many different ways out there to trade. As far as, you can trade technical analysis, fundamental, purely timing, purely price action, market maker. Am I a scalper? No, not really. Because generally when you think about scalping, when I think about scalping at least, is 10 to 15 pip profits. And for the most people that know me, know that I like to stay in. Yes, you can always use that daily range to your advantage. And what I'll do is I will start another scope, if not tonight, tomorrow night, and I will show you guys the daily range chart thing. And it pretty much just tells you yes or no. It's hit it. You don't even have to look at it. And if it says yes and the market's down in price, just understand that they have to bring it back up. So look for an entry, And if it's up and it says yes and you understand that, it'll tell you the number. If it says 230, understand that they have to bring the pips. If it's high, 230 pips, and the market's high, understand they have to bring that market down 30 pips. At least, minimum, you have 30 pips profit there. If not more, because they usually bring that thing down to around where they started the day. Like I said, they don't want to lose too much, depending on the day they've had. But email, and then from there I'll try to connect with you, maybe on Facebook or Twitter, at FFX Academy, Perfect, man. I'm glad. Thanks for stopping in. Yeah, it's a whole new world of trading. It's something that, the cool part about this, right, is what you can do is you can use the chart set that I use. They really take into account where the moves occur, but then you can honestly take out everything that you have, go to the perfect whatever you want, and draw in those trend lines, and you can capitalize on both of them. Because if you see a failure at a heavy trend line and you're on level 3 creating an M, and you put those two things together, it's crazy. All right, man. I just screenshotted that, and I will be sure to hit you up, bro. Or I didn't see the name, so I apologize if it's a woman. But any questions at the end of here? As far as, I'll show you guys real market. Obviously the markets aren't open, but I'll show you guys real templates and stuff. I have an iPhone, so I screenshot by hitting the power button and the home button at the same time. If you're on Android, usually there's a screenshot thing. Yeah, no problem, Vortex. I'll be sure to get to you within. Anybody that knows me knows I'm a go-getter, so I'm sure I'll be getting to you within the next 10 minutes. Don't worry about it. Yeah, no problem, and we'll be back. I plan to do these. I try to do these, once or twice in a month. But as far as real deep analysis of the market, that doesn't happen. I won't do that on Periscope as much anymore. I do that a lot in private rooms with people that I work with. But on Periscope, I won't be doing that as much anymore. What do you mean something different on here? Oh, I gotcha. Yeah. No, no worries, man. Do you need me to put the email back up? I can throw. I think you guys got me to 20,000 hearts. Let me go check. Is the IRS going to come after us? I hope. That means we're making money. Okay, I'll put that up one more time too. Last time that'll be up for the night. And what was I going to say? Oh, Periscope. Let's see if we hit me 20,000 hearts, guys. You guys hit me 21,645 hearts, guys. Thank you. I appreciate it so much. That's incredible. That's incredible. You know what? Honestly, my dad's a financial consultant, financial advisor, and um, yeah, that's the end of that. I just gave it to him. As far as I'm concerned, just find a financial advisor if you've really, for the most part, you can just do it right through PayPal. But if you gain, I'd have to go ask my dad. He had to do it for me, or he hasn't had to do it for me yet because I haven't been in FOREX for a year. Um, but he will be doing it for me. As far as doing taxes, you just have to claim it like normal income, and it's bigger taxes because um, when you really start gaining the money, you know, I mean, $1,000 a week is a very feasible thing within the first 4 months. It really is. I've done it, and it's astonishing to me that it's possible. I mean, right from your cell phone even. But yeah, as far as taxes, I'm not the right guy to ask. I'm sorry about that. But financial advisor is a good idea. Yes, Path, and I know you will, dude. You're grinding out there, bro. We'll get the tests after your first chapter to you, dude. Think about it. Once you're done with the third chapter, you get to trade with me every single night. Once you get to the third chapter, you trade with me every single night that I'm on. I'll be like, this is where we're going, this is what we're going to do. And when I'm not on Periscope, I can really focus on it. So, but I'm loving Periscope as far as like people engage and I can talk to people that are like-minded and obviously the private, go-to meetings with some people I work with are better, but it's fun engaging. Like I think I got 2 or 3 people tonight to actually think about Forex. I mean, I could have just changed somebody's life. Um, I use Google Hangouts if I'm expecting less than like 6 people, but if I'm expecting more, um, I will use GoToMeeting just because it's easier. And on Google Hangouts, a lot of times people will forget about mic you know, their mics are on, and I don't exactly like to deal with mic noise when I'm chatting. Yeah, but I mean, when we're just chilling, just waiting for the market to hit, Google Hangouts is the shit, you know? But any more questions, guys? Forex related or non-Forex related? I think I'm about to go dress up as a large crayon. I might hop on and show you guys and then head off to a neon dance, actually. Any more questions, guys? Yeah, Vortex, I'll email you. And I'll go with an overview of what it's all including. I don't like to mention too much on Periscope. I just like to give the info. People know I'm legit, you know? I don't want to mention anything that'll get people pissed. Alright, guys, I'm heading off. Happy Halloween. If you guys are going out, please be safe, alright? Don't drink and drive, call somebody. Peace. See you guys later. Be sure to hit my email.